Welcome to Kitco News. I'm Niels Christensen. The Canadian mining sector is facing a difficult challenge as companies try to adjust to a world impacted by the COVID-19 pandemic. Here to talk to us about the health of the mining sector is Lisa Davis, CEO of PearTree Securities. Thank you very much for joining us today, Lisa.
Thank you, Niels. It's good to be here virtually anyway, a little different than our last interview.
What are your thoughts on the health of the exploration sector in Canada? How big of an impact has COVID-19 had on exploration companies?
It surprisingly hasn't had that big of an impact. In the very early stages, when governments were starting to react, and in some cases, depending on the jurisdiction in Canada, there were some shutdowns of sites and travel restrictions and other things that were being done where companies of their own initiative, just for health and safety reasons, were limiting access to site. So, there was quite a bit of uncertainty for the first little while. But in terms of financing, things have been surprisingly robust for the past couple of months. Now, there's other factors at play. I mean, in the precious metals area, of course, the gold price has been driving a lot of activity. But at the same time, you have to remember that the improvements in the mineral sector as a whole aren't shared evenly. So for more senior companies that are producers and seeing the rising price of gold in particular dropping straight to their bottom line, there's been a lot more interest, and it's created opportunities for fundraising by those companies. But in the more junior end of the sector, we don't see that trickle down very quickly. I know I looked at some statistics recently, and I believe as at the end of April, if you look at the TSX and TSX Venture Exchange numbers, that the market value of the mineral sector across the board, both TSX and TSXV, actually has increased from same time last year by almost 40%. That's really skewed though. Like that's all the TSX. The TSX Ventures remain flat in terms of market value.
So one of the things the COVID-19 pandemic has revealed is maybe unintentional flaws in the flow-through funding system. I'm sort of wondering, do you think these are fixable? Considering that flow-through funding accounts for about 70% of funding for exploration companies.
The flow-through regime is actually a very well-designed program. So I don't know so much if I would describe what COVID-19 has shone a light on as flaws in the system. I think there's probably two different areas. As I mentioned just a couple of minutes ago, because of different types of restrictions that may be hampering the ability to do exploration work right now, there has been something that really was unforeseen and understandably so, that has to do with the timing of how the flow-through share regime works. So typically for junior exploration companies, when they raise money, they rely on something called the look-back rule. And that means that I can raise money in 1 year. So for instance, if I had raised funds that have to be used on what's called Canadian exploration expense, that defined group of expenditures that flow through share money can be used on. If I had done a raise in 2019, I would be able to confer the tax benefits associated with that on the subscribers of the flow through shares for their 2019 taxation year. But as the issuer of those shares, I would be able to continue my exploration work using the proceeds of that financing right through until the end of the following calendar year, so 2020. So if a company had raised money in 2019 and then, been blindsided, as we all have been, with what's happened as a result of the pandemic, their budget might have been designed such that they, had spread the use of the funds out over time. And the worry is that they may not be able to spend all the money that they're required to spend by the end of this calendar year. Now, the consequences of that would be that they would have to refile their tax forms and advise the government what the shortfall in the expenditure is, and the subscribers for the flow-through shares would be reassessed in respect of the tax deduction associated with that shortfall. So that's one thing which, in normal times, like 99.9% of the time, isn't really an issue. The flaw, if you want to call it that I think, has been revealed, and like so many things with COVID-19, I don't think it's a result of COVID-19. It's just kind of shining a spotlight on something that's been there already, is that there has been some inconsistency both in the interpretation of the rules that determine the category of expenditures that flow-through money can be used for, and the review process by CRA and the determinations as to whether or not things are eligible expenditures. And that's been something that issuers have been unhappy with for some time, and the PDAC has been behind for a while in terms of an initiative working with the Canadian Revenue Agency to try to get more clarification on some of that. And I think this has just probably expedited that exercise.
So you actually have a petition going on through PearTree Securities, because a lot of these issues, it's going to take legislation to sort of make these changes, like pushing the deadline for funding to 2022, I do believe. Have you had any word from the government? Have they been receptive to sort of helping the resource sector through this difficult period?
There hasn't been any definitive feedback. I do know that the government has started to turn its attention to this issue. I think, I don't take any delay in responsiveness in this case to really be a signal that the government, doesn't think that the proposals are good ones. I just think that there's been so many emergency measures that have taken priority, and the government, is just inundated with things that they've had to triage, and I guess this one hasn't been one that they've been able to get to the top of the list as quickly as the industry would like. Having said that, I'm quite confident that we're going to get the results that we're hoping for. I mean, one of the things that's really important to note with regard to what PearTree has recommended in that petition, and I should say also the PDAC and the AME in British Columbia, have made their own submissions along very similar lines. But one of the things that I think makes this a pretty easy request for the government to fulfill is that there's no need for the government to dig into its pocket and provide any funding. This is really something that has to do with relaxing certain rules for a period of time to allow issuers to stay on side, because even though they've been delayed with spending some money, and I would think that that would be something that would be pretty easy for the government to deal with it. And the other thing is that there are other emergency measures that a lot of businesses have been able to take advantage of, which junior mining companies or mineral exploration companies in particular generally can't benefit from. So for instance, one of the big programs that the Canadian government has offered to businesses generally is the wage subsidy program, which requires the companies to demonstrate that their revenues have gone down by a certain amount, compared to the same period last year. Now, if you're a non-revenue producing company, then the test just doesn't work for you. It doesn't mean that you're not an employer who is trying to keep people on staff, meet payroll, do lots of work that can be done at home in terms of continuing to pursue projects and be ready to go back on site. So, a lot of employers in the sector are really, doing their best to keep people on the payroll and not have anybody suffer as a result of things beyond their control. But since other benefits aren't available the way they're designed, what's being requested, both in terms of this extension of time for flow-through funds, but also the idea of allowing some of that flow-through money to be used for things that may not be eligible expenditures in normal times to, hopefully keep as many people employed as possible, is something that I think seems to make a lot of sense in the circumstances.
So just going back a little bit to what you're saying about valuations, especially in the producer side of it, companies listed on the TSX increasing. I'm sort of wondering, I mean, do you think that will trickle down to the junior explorers? I'm sort of wondering, what is it going to take to sort of bring interest back to junior explorers, do you think?
Yeah, I think it will. I mean, I think, through the cycles, there's always sort of a bit of delay before things trickle down. Also, we did see a lot of the more generalist type investors who had exposure to mining get fairly badly burned a number of years ago, and decided to pull back quite a bit or even completely. A lot of more generalist type investors also, if they had a portfolio manager focused on the sector, may have just let that person go and really sort of defocused on that. There's definitely a lot more talk about generalists starting to look again at the sector. Things are extremely being, the valuations are so low that there's a lot more talk now about what seems to be a pretty simple thing when you say it: buy low and sell high. Most people don't actually behave that way, but when you look at assets relative to market valuations right now, there does seem to be a wider group beginning to recognize that there are opportunities for them now.
Well, and I mean, you guys make deals in the mining sector. I mean, are you starting to see for yourself, sort of that is it getting easier to raise money for the mining sector?
I have to say I am surprised, especially with the backdrop of COVID-19, that the things seem to be fairly robust right now as far as flow-through financings go. So, you know, a month or a quarter doesn't really tell a big story. I know in 2016, there was a lot of optimism as we saw like quite a big uptick. I think it was in the second half of the year. We were extremely busy, and you know, we thought after, what was it, you know, 5-6 years of things just trending downwards, that we were finally going to see exploration pick up again. And there was,
and we know what happened.
Right. So we had a couple of great quarters, and then, you know, things trended back down. So I don't want to say that we're dug out of the hole yet, but indicators are actually quite good.
How does it, you know, so okay, money is starting to flow back. How does flow through funding then, like, do you think there's going to be more deals with flow through funding, or is it just going to be, you know, like, can companies sort of do it on their own without having to, you know, sort of have this flow through side of it?
I really don't think that a lot of companies would be able to even survive without the flow-through share regime. I mean, it is true that there are certain companies that are like the more mature side of the exploration group that you know, are followed more closely and have some good institutional investors. But by and large, the group that's doing the exploration really relies heavily on flow-through shares. And you know, another interesting statistic that I was looking at recently is the working capital of the mining companies, the exploration companies on the TSX Venture Exchange. About 2/3 of those companies in that sector have working capital below $1 million. And I know that you know, they struggle generally.
Wow.
If you know, that's runway, although those companies tend to be very lean in terms of you know, what they spend on anything other than exploration. But you know, that is not going to keep them going very long if they have to rely on being able to raise so-called hard dollars as opposed to flow through. So I think that the flow through regime is going to be around for a while. If we want a healthy sector, and we went through such a long period of time where capital raising of any form for the sector was so challenging, and I mean, we may still be in that time frame. And what's happened is, you know, that pipeline of projects for the companies that are a little more mature and can take them and develop them into producing mines has really dwindled to a point where we're going to find that we will have shortages.
So to wrap this up, I guess, I mean, are you optimistic that, you know, the Canadian mining sector exploration side of it, everything comes out of this sort of healthy?
Yeah, I am optimistic. I mean, I do, like I said, I was quite nervous in March when you know, we had a declared pandemic, and what the impact of that would be. In light of that, the financing activity has been quite good, and you know, there are other factors such as the gold price that's been holding up above $1,700 for some time now. So yeah, I am optimistic, but you know, at the same time, I'm realistic, and there's still lots of challenges, and the flow through share regime is really a critical part of this whole ecosystem to make it all work.
Well, thank you very much for your time, Lisa. Thank you very much for your thoughts. This has been as always, a fascinating conversation. Every time I talk to you, I learn a little bit more about the flow through regime and just how important it is to the mining sector. So again, thank you very much for coming on.
Thank you, Niels. It was great talking to you again.
Thank you very much for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.